What's going on, you guys? Q here from Hyperstocks. Thank you for checking in for another video. I have an educational video for you today about the three most important components of every trading setup. These three components are going to be fairly simple right off the bat, and you're not going to struggle too much to understand them. I've simplified them as much as I could, and I'm going to show you multiple examples on an actual chart of how to apply these three components. By the end of this video, I hope to turn you from a gambler to a professional trader, because most traders end up losing because they go out and they gamble away their money without having these three components figured out before they enter every single setup. So without further ado, let's go ahead and get started. The first one is going to be the entry point. I know you're probably saying that this is way too simple. Of course, you're going to enter the stock. Yes, but bear with me because it's all going to make sense once you actually have it all figured out. Entry point, before your specific entry, you're going to figure out what strategy you're approaching the stock with. Are you looking to enter the stock on a breakout strategy, a moving average reversal or bounce, range trading? Are you doing a pattern breakout or power earnings play? So there are a lot of strategies on the stock market. You have to figure out what strategy you're comfortable with for you to successfully have these three components work for you. So if you don't know about strategies, feel free to subscribe to the channel. We'll be doing a lot more videos in 2021, and we already have some videos from last year, and we hope to teach you more about all these different strategies and how you can trade them yourself. So the first thing that you need to figure out when you're looking at a stock is your entry point. Where do you want to enter the stock from, and what strategy you're approaching with? And it will make sense when we go into the chart in just a moment. Second component is going to be your stop loss point. Where do you call it quits? Most traders do not have a stop loss figured out before they enter the trade, which is a very risky thing to do, because then you do not know where you're going to call it quits, and now you're going into the gambling stage, because you will be losing $10 and then losing 20, and you don't know where the stock is going to find support. Therefore, you need to figure out your stop loss before you enter the stock, and that stop loss is typically derived from a moving average support break. So if you have moving averages at 10, 20, 50, and 100 on your chart, then you're going to use one of those moving averages as your stop loss point. If the stock breaks below, it'll make sense on the chart. In terms of price point support break, you can use that as your stop losses point. The pattern break, you can use that as your stop loss point. So you need to have that figured out before you go into a trade. That way you know where to call it quits, instead of just letting it run, and then when you're losing 50%, you finally get to leave the stock. You don't want to do that. Next, you're going to want to figure out your price target. Another wrong thing that a lot of traders do is, and this is probably the most asked question that I get, is where do I take profit, or how do I know when to sell? And that's typically why traders give back a lot of their profits, is because they do not know when to exit their trade. And you need to have that figured out before you even go into the stock. And the way you figure out price target is a very simple process. All you're going to do is you're going to find the resistance points that are coming up, and you're going to schedule price target orders, or you can do it manually, add those specific resistance points. So it's very simple. I'm going to show you on the chart, and actually let's go ahead and review these real quick before I move into the chart. So first we needed the entry point, next we need the stop loss point, and third we need the price target. So ABC, those are the three components that you need to figure out when you're trading any setup. Alrighty, so let's put it to action. Let's see what this looks like when we actually put it to charts, because so far we've only given you definition and explanation. So let's go ahead and see how you can apply it to the chart that you're trading, or a stock that you're trading. So first of all, let's go ahead and take a look at a chart that I found attractive. So this is a stock called FUV, and they are in the electric vehicle sector, which is by no doubt one of the hottest sectors in 2021, or to begin 2021. And that's important too when you are trading stocks, is you got to figure out what sector your stock is in, and is the sector seeing money flow, or is it not? Because you don't want to be in a sector that's not really receiving a lot of attention. So the electric vehicle market's on fire, and the reason why I find this specific stock attractive is because looking back into its history, and sometimes you do have to look a few months into its history, we can see that back in November, the stock had a very strong week. So there was obviously about 8 to 9 days that were very green, and it had a nice accumulating volume pattern that came into fruition on November 19th and on the 20th, in which the stock shot up and actually doubled in price. However, it came back since. So a lot of traders, their problem is that they will chase the stock on the way up. However, sometimes you have to just accept the fact that you missed the entry, and you have to wait for the stock to give you a setup in which you can trade the stock on. So before we can actually create a setup, we need to figure out a few important things, which are support and resistance points. So let's go ahead and lay out our resistance points. So the first resistance point, and which is the most obvious one, is going to be the highest that the stock had achieved on its breakout run, in which in this case it will be $20.30. So now we have our first resistance point for the stock. Second resistance point is going to be the second highest point in which the stock recently achieved, which is going to be $18.70. Alrighty, so now we figured out two resistance points. Now let's go ahead and see what our supports are. Our supports are going to be down here at $10.80 because this was the lowest that the stock had dipped after it came down from this strong breakout day. So after the stock had gotten rejected at $20.30, it came all the way down to $10.76, and now that's our support point. Next support point is going to be where the stock had bounced a few times, in which we can see that there is one day in which it closed right at 13, another in which it bounced at 13, another which it bounced at 13. Here we have two bounces at 13, so we have a very strong support at $13. We can safely put a support there. And then we also have another support point at $15. And the reason why it's at $15 is because that's where the stock had gotten rejected off of multiple times. We can see here's these 3 days of rejection, 2 days of rejection, and it finally broke out and it dipped just below that point for support today. So now we have the $15 support, and we also have the $13 support. So now we have a basic layout on a chart. So before you enter any trade, this is probably the best thing you can do, because if you are trading a stock and you're not doing this and you're just kind of buying it without looking at it, then you're not entering a stock on a proper setup. You really don't know where you want to draw the line for supports or draw the line for profit taking. This is how you build a successful chart. You need to lay out these things before you enter the stock at all. So we are on the daily candles. So let's go ahead and jump into a little bit of a micro chart. Let's see what's going on within the stock so we can figure out if there is a way to enter the stock or where we should enter the stock, which is going to be our first component of our setups. It's also important to realize that support and resistance points sometimes are going to be in the micro chart a little bit closer, because now that we're looking into the stock a little bit closer, we can see that there is another resistance point, or in this case support, at $16. So our current trading range, and we can see this clearly, is going to be the high of today, which is going to be $17.64. So the high of today. So this was today's move on the stock. So we have a resistance point at $17.70, and we have a support point at $16. So we can safely create a trading range in between those 2 points. So the smallest 2 points to one another are going to be your trading range, which is going to be where your entry target is. So you want to enter the stock anywhere between the two closest trading range resistance and support points. So you can enter anywhere between $16 and $17.80. You prefer to enter closer to the support, obviously, because you want to get the stock on a bargain. And now you can safely put a stop loss anywhere below $16 or the $15 support or the $13 support, and it all depends on your own risk tolerance. So technically, this stock has not broken the breakout pattern until it dips below the lowest low that it made at most close to the support, or to the breakout. So in this case, it was at $10.71. Technically, the stock can come down to $10.71 and still recover back up, but it all depends on your own risk tolerance. At Hyperstocks, we typically use either the second closest support, or we use the moving average support, in which in this case is going to be the 10-day moving average, because the stock is trading above the 10-day moving average. So let's go ahead and remove all that, and we need a support point that we can use as a stop loss. We can safely use the 10-day moving average as a support point in which we can place a stop loss at, and typically we enter stocks that are above the moving averages, at least the 10 and the 21s. So it's that's probably my favorite method of using stop losses, is finding the moving average and placing a stop loss just below it. But price point supports, as we were just showing you, are very much still possible as well. So now we've figured out our entry. We enter within the range that it's giving us. And this also depends on the strategies. Like we said, there are different strategies that you can enter stocks on, but we're not going to get into too many of them just for the length of this video. The moving averages are going to be our stop loss points, or the price points are going to be our stop loss points. Depends on what you find work for you. So now now we need to figure out our price targets. So where do we take profits at? Profit taking points are going to be at the next resistance points available on the chart. So remember the first two lines that we drew on the stock, which were at $18.70 and then at $20.30. Those are going to be our first two profit taking targets. So when a stock approaches a resistance, it naturally starts to feel resistance because at one point the stock was rejected off of it, which means that there was not enough buyers to keep pushing it higher than that point. So as the stock approaches a resistance at another point, you're going to expect it to slow down, and usually it's a good idea to take some profits at a resistance point in case the stock sees a hard rejection at that point. And then you can at least secure some profits, and then you will raise your stop loss. So this is a very important component. You need to learn how to raise your stop loss as the stock pushes higher. So say initially when you entered the stock above the 16, you use 15 as your support stop loss point. Now that the stock is above 18, you can safely use 1770, which is going to be the resistance, which now turns into a support point. So if the stock breaks above 1760, it turns into a support point, and you can use that as your new stop loss as the stock pushes higher, and you'll take profits again at the next resistance. So now we have our three components, and they are laid out in front of you. You rewatch this video a million times because this is going to be what takes you from that gambling mindset to a professional trading mindset, because now you will learn how to approach stocks professionally and setups professionally. Thank you so much for joining us, guys. You guys have a great night, and good luck with your trading career.